All right, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to our presentation of how to zero in on winners and profit from volatility, your first quarter earnings season checklist. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. Throughout the presentation, please submit your questions using the Q&A window, which is available in the upper left-hand corner of your screen. We'll be available throughout the presentation to respond to your questions. As a reminder, this webinar is being recorded and a copy will be sent to everyone who is registered. Now, with no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy presents at NASDAQ and industry conferences on fearless investing. To get us started, here's Sandy Chaikin.
Joe, thank you so much, and thank you all for attending today's presentation. As you may have noticed, Joe did not introduce Mark, and that's because he unfortunately is taken ill and is not able to be on today's presentation. So you have 100% me. So what we like to do when we start a presentation like this is to look at the overall market, where we are. And we look at the SPY, the S&P 500, as you can see the chart up here. And you can see, as Mark has been predicting, we have reached this W pattern. And now we're on the rise back up again, which is a good thing. Had a very good rally through yesterday because the earnings, have been strong, but there's a lot of this sell on the news mentality where investors tend to be nervous. They take their profit when they hear good news, and that, of course, brings the price down as there's a lot of selling going on. And that's been happening also with poor earnings. IBM and Philip Morris both have reported recently. Philip Morris reported today was down 15%. I'll have to note, because that's in our bearish section, that is a classic bear as is described by Chaikin. So our members would have known to be well out of that stock before that 15% drop took place. But I guess the bottom line, the message here is that if you look at the money flow here, which is this mountainous indicator, this measures institutional money in and out of a stock. This is something Mark created some 35 years ago for institutional investors, and it's still widely used today virtually on every stock charting platform. This is incredibly helpful because what this is saying by this red clump of red is that institutions are selling. So we're still not out of the woods here, and that brings our word of caution. So with that said, let's look at historical patterns. And the pattern that we see right now of being down 10 to 20% is normal. You can see since 1945, we've had 27 declines of between 10 and 20%. Average decline is down 13%. I think we're still about 10%. And the average length of these declines is 4 months. And you think if this started in February, that's February, March, April, May. Coming out of May, in 6 weeks or so, we should be coming out of this period and seeing perhaps a less volatile market. Average time to recover is 3 months. So it's still going to be a choppy spring. With that said, there is a lot of volatility in the market, but we see volatility as an opportunity. It is a way you can make money on the upside or on the downside if you're trading options. But those swings in the market can be really profitable if you know how, and if you have a disciplined methodology, I'm trying to say that, that guides you. If you're just working on your emotion, it could be problematic because, as we know, emotions, we react often without thinking and without making good decisions. So having this disciplined methodology is really critical, particularly in these volatile days. So just a little overview of earnings season itself. Obviously, every quarter, the companies that are on the stock exchange are required to report their earnings every quarter. And these reports are scrutinized by the Wall Street analysts and professional investors. What I found is interesting when I started investing in 2012 is that the actual earnings compared to the analyst estimates is what drives the stock price. When I was in product management at Elizabeth Arden and L'Oreal, we were always looking at last year. What are we doing this quarter over the same quarter last year? That doesn't appear to be what's going on in the stock market. The comparison is always what's happening with actual earnings compared to analyst estimates. And I'm going to show you exactly how you know what analysts or estimates are, whether they're bullish or bearish on a stock going into earnings. That will help you avoid or buckle down on and look for an opportunity to buy that stock. And company guidance is the wild card. It's not something that's measurable, but they are required to report it. And if everything's positive, for instance, they beat on estimates, they beat on earnings, they beat on revenue, but their guidance is poor, the stock could still tank. So that's always the wild card, and there is no way to predict guidance. So just kind of a caveat there, that's always a wild card. But the opportunity is to make some short-term trading profits. I invest primarily in stocks for the intermediate term. I tend to hold stocks 3 to 6 months, if not a little bit longer. but I do take advantage of these short-term trading profits when I see the opportunities around earnings. So volatility. We've all been talking about volatility since, what, February? I think that's when we kind of came out of our smooth ride of a strong bull market with kind of no volatility into one that's now where we're used to it every day. I mean, for instance, the Dow moved over 190 points intraday today before closing down 83. So there's a lot of movement, but that's your opportunity, you know, because when a company reports, if they beat estimates, they tend to spike up. If they disappoint, they tend to spike down, you know, and that's where that can be your key to trading success. So our promise is you're about to discover how to take advantage of volatility and profit from earnings season. We talked to a lot of members when they first come into Chaikin Analytics, and they're fearful of earnings, and we try to turn that thought process around to anticipate it and be thankful for it. And all of this is to make more money in the stock market, right? I mean, we're here to make money. And it's okay to feel that way, particularly ladies out there who I know from my own experience were very hesitant to talk about money. But it's okay to talk about money. It's okay to talk about making money. And it's okay to celebrate making money. And that's what Mark and I do with some of the profits that I make from my stock trades. We've been to a lot of really fun places, and we're going to Italy on May 2nd, just around the corner. So that's all thanks to the profits I'm making. So why should you listen to me over this next hour? Well, as Joe said in the introduction, I've beaten the S&P ever since I started investing in 2012, and since 4 out of 5 pros are known to underperform the S&P 500, then by correlation, I'm also beating 80% of the professionals. I started in 2012 investing in stocks that I knew of, like eBay, Yahoo, Southwest Air. And then I got into these, I call them the triple digit winners. These are these small cap stocks that no one ever heard of, like Centa, which I'm going to be talking about today, Quad Graphics, NACO. These are some of the stocks now just that you'll never have heard of before, but small caps are kind of leading the way today and something to take a closer look at. Last year, I got into stocks like AbbVie, which was up 100%, Lam Research up 65%, and Coors was up 74%. And this year, I'm in Boeing, Lam Research, and CNC, Lam Research, and all of the semiconductors took a big hit today on news about chips not being necessary in Apple phones going forward or something like that. But that's one I'm in more for the long haul. And I do this on spending 10 to 15 minutes a day on my stocks and reviewing my portfolio. And I think that's a realistic time frame for most people to allocate. We are all busy, right? I mean, we all have a million things to do during the day. So when you say, well, gee, do you want to research your stocks now? It's like, boy, I don't know. I don't have time for that. Well, you don't have to. With Chaikin, we basically do the research and analysis for you, and we just ask that you review it every day and look for the changes that are going to impact the price. And I'll show you how to do that. So a real quick overview of how I first started investing. It was back in really the 80s and 90s. I was a senior marketing executive with L'Oreal and Elizabeth Arden launching designer fragrances, and had a very busy career, and got started through my company's 401k plan investing in mutual funds, which were great. And as those were growing and my career was getting busier and busier, I felt that I was not the right person to be managing this type of money. I didn't have confidence that I could continue to pick good mutual funds. So at the suggestion of a friend, I turned it over to a money manager, and he immediately took what I was in. And I was in some pretty good funds like Magellan, Fidelity Magellan Fund, and the Legg Mason Value Trust. But he sold those and put me in 8 or 10 mutual funds of his choice. That, as I later learned, was what Mark said is pretty standard procedure. We weren't together at the time. So that went okay. Oh, that went all right for a while. But then in 2008, we all know what happened there. Had this huge meltdown. This market was just selling off literally every day, big time. And I kept calling saying, gee, don't you think we should sell? Because it's pretty obvious this market is going to continue to go down for a while. And the answer I got was always, no, it's okay, just hold on. It'll all come back. And, you know, as I watched it go down 10, 20, 30, 40%, I was getting more and more uncomfortable. And at the 40% mark, I said, I've got to just take this back because this is too uncomfortable for me to deal with. And I felt confident I could do better than losing 40% plus paying a fee on top of that. So I took it out of the care of the advisor and put it into an S&P 500 account at Vanguard until I could figure out what to do. And since that was a real turning point, though, because I became resolved at that point to really take control of my financial future, because as I say on every presentation, really nobody cares more about your money than you. And this is really a big reason why I'm here presenting this way to you today, is to encourage each one of you to take control of your own money. Even if you have an advisor, which is great, many of our members are advisors, that's terrific, but you want to have a seat at the table, you want to understand what he or she is doing, why he or she is recommending what she or he is recommending, and just be part of that conversation. Because you don't want to find yourself like I did, of turning something over 100% and then having it lose, you know, a huge portion. I'd worked over 30 years to build that fund. So, and I gave up a lot to put that money away into a 401k plan. So to see it disappear, you know, almost in half, basically overnight, was pretty devastating. And it's not something I ever want to go through again. But I've now brought this account back. It's now over 4 times what it was when I took it back. So all is good. But that was not an experience I ever want to go through today, nor do I want to see any one of you go through that either. So there's basically 4 steps we're going to go through today about how to profit from earnings. First and most important thing is you've got to know where a stock is headed, either up or down. It's that simple. If you don't know where it's going, you can't make any type of decision beyond that. And you want to know, and the way to do that is to identify them with our formula that I'm going to show you. It's either a classic bull or a classic bear. You want to know when to time you're buying and selling. Timing is the biggest challenge our audience always says that they have, that they never know when to get in and when to get out. And so we address that. here. I'm going to show you how I know when to get in and when to get out. And you want to know whether a stock is likely to beat or miss earnings. And that, again, is to take advantage of that volatility that tends to go with earnings reports. The platform I'm sharing with you today, the stock charts are all from Chaikin Analytics. You can see here it's on desktop and iPad. It's one subscription for both. I'm going to be showing you the desktop charts. The discipline methodology that I referred to in the opening, basically this is the plan. This is the way I invest. I first of all look at the power gauge rating, which is our proprietary model that looks at a stock's likelihood to out or underperform the market over the next 3 to 6 months. That's the key. If it says bullish, that's great. I know I can look further. If it's neutral or bearish, I know that's not a stock I want to invest in. It's that simple. The buy-sell signals, along with some other indicators I'm going to be sharing with you, help you just decide when to get in, when to get out. And then there's technical indicators on our platform, Chaikin money flow, which I was showing you on the SPY chart, and Chaikin relative strength, which is also a red-green indicator, making it very easy to decipher whether it's good, green, or bad, red. But let's start with the power gauge rating. Now, this is the model that Marc created when he came out of retirement right after the 2008 meltdown, when he could see there were literally millions of people, investors like me and probably like you, that had become disillusioned with Wall Street and had taken our money out of traditional brokerage firms. There was over $1.3 trillion that came out of brokerage firms in 2008 and into self-managed accounts like I had created at Vanguard, yet we didn't have a clue what to do, right? I mean, we said we don't want to invest our money with a wealth manager right now after getting burned, but what's the alternative? So what Marc told me is, because that's when we were getting together, he said, look, why don't you just put it in an S&P 500 account until you can figure out what to do? So that's fine. That's what I did. But that also was the genesis of Marc's thinking of, well, there's literally millions of people like you out there, Sandy, who are now on your own. You don't have the education or the tools to manage your money. So he said, I'm going to come out of my 10-year retirement. He had retired having sold his business to a division of Reuters. He came out of retirement to create Chaikin Analytics. And the background that he had was creating indicators and tools for institutional investors so that they could invest their clients' money more profitably. So what he said is, I'm going to build on all that knowledge because I know exactly what the institutional investors are looking at, what they use to base their decisions on, and I'm going to build all that into a platform that is easy enough for someone like me to understand what it means. And the centerpiece of all this is the power gauge rating, which you can see on the left. Here, it's showing for this ATO, it was a very bullish rating. It takes 4 basic components, as you can see here. It takes all this data that you can see on the right, which I don't know about you, but if I looked at that, I wouldn't have a clue what it's saying or how to determine how to take action from it, make a decision from it. On the left, it's very clear. This is a good stock that has a high potential to outperform the market over the next 3 to 6 months. So what we say is it cuts through the clutter, and we get a lot of attention on the power gauge rating. It's used by a lot of our partners. I know there's a lot of people on today from John Carter's community, and John's a big advocate of the Chaikin power gauge rating. He says there's a lot of hyped out tools out there, but a single tool that combines 20 technical and fundamental factors, which is unusual. Most models are either technical or fundamental. We combine both to anticipate a stock's profit potential got my attention. It's called the Chaikin power gauge rating. It looks like an objective, awesome meter for stocks. So what are those 20 factors? Well, here they are. These are the 20 factors that Marc tested from a pool of over 200. It took him over a year to test all of this to find the best, not only the best factors, which are the 20 here, but the best weighting. So they're not all equal weighted. He's put different weights on each of these factors. And once he's done that, that now, in seconds, what would take literally hours and days of research, if you knew where to look and how to evaluate it, is now combined into this single rating that you can see spits out here. I circled the earnings component because obviously we're in earnings season. So this is the component I'm spending extra time looking at now. And I highlight the earnings surprise. That's a factor that I have particular attention to. And that, as you can see, I pointed over here to earnings estimate trends. That kind of drives that factor under expert. So you can use all four, of these components, all 20 factors to look at the overall rating. Someone like a Warren Buffett, who's interested in value investing, is going to spend more time on the financial component. Someone like a Jim Cramer, who's focused on earnings, is going to spend more time in earnings and might want to drill down on each of these 5 components that or 5 factors that you see here. The expert component over here is kind of our secret sauce. There's not too many people or not too many places where you could find what the short sellers are doing or what the insiders are buying. You know, you want insiders to be buying your stocks, the stock. They know more about a company than we do, right? You want the short sellers not to be shorting your stock. They consider the smartest people on Wall Street. So there's a number of ways you can break down and look for a power gauge rating on each of the 20. But to simplify it, you can also just look at the overall rating. If it's going in the right direction, then maybe you want to drill down. If it's not, forget it. Move on to the next. These are the earnings factors that I broke down for you in Walker Dunlop. So this is a stock chart from Chaikin Analytics. And the power gauge rating you can see here for Walker Dunlop is very bullish. The power gauge rating is down here on the bottom. It's this green and yellow ribbon down here. Green means it's bullish, yellow is neutral. And you can see I've drilled down on the earnings component, which is very, very bullish. It's as good as it gets. And you can see each of those factors is really strong. So what this means going into May 2nd, on the stock chart, we show you when it's going to be reporting. We show you past reporting dates with the green here, and if you hover over them, they'll give you the dates and the figures. But basically, green means they beat, and red means they disappointed. Red, green. So looking at this, going into a Wednesday, May 2nd, earnings is, what's that, about a week from 2 weeks from yesterday. What do you think? If you just put it into your Q&A box, you think this stock is going to beat or disappoint earnings, just based on those 5 factors you're looking in that power gauge rating. If you just put into your Q&A chat box, beat or miss. Beat, beat, beat. Okay. Good. Thank you. Okay, I'm getting a lot of beats, so that's great. Thank you. I do too. I totally agree with that. So, you know, this might be a stock put on your watch list. Start watching this, and we'll drill down on it a little bit more later on, but I just wanted to point that out on the power gauge rating. Okay, so the power gauge is used by pros. Marc is quoted in the media practically every week, particularly on CNBC. He's done some kind of like fireside chats with Jim Cramer recently, been written up in Barron's 3 or 4 times. Market Watch hedge funds use this. Paulson uses it. Cramer used it at his old hedge fund. John Najarian uses the power gauge rating. So it's really been tested by the media and by the pros. And I love this analogy here as to why why it's important to use models. And this quote is so dead on. Models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. I mean, who can relate to that, right? We are human beings. We're driven by our emotions. It's very hard to turn those off. That's why a disciplined methodology based on a model, which is totally objective, is really so critical and so important. So the model got the attention of NASDAQ, who asked us to create 3 indexes based on the power gauge rating. We took their large cap, small cap, and dividend achiever funds, overlaid the power gauge rating, and filtered out the bearish and neutral stocks, leaving only bullish rated stocks. And the first year those were in the marketplace was 2014. They have far exceeded their benchmarks, the NASDAQ index, every year. So that got the attention of New York Life and their mainstay investment division. And they have since licensed those, the small cap and the large cap, and are now offering them as ETFs, so that they now sell to money managers, who in turn put their clients, their individual clients, into portfolios of stocks based on the Chaikin power gauge rating. And as I mentioned earlier, Jim Cramer tweeted this out when Mark was presenting at one of his forums in October. He said, Chaikin Analytics model is the best. I used it at my old hedge fund. So that's great too. All right, so classic bull. We got through knowing the direction a stock was going to take. Now, how do we identify a classic bull? And I know we get a lot of kind of skeptics on calls saying, you know, the market is just so volatile. I think I'm going to put my money on the side right now. I just gotten crushed by some other stocks and don't know what to do. I mean, our answer is, you don't need other platforms to help you make a decision. Chaikin has everything you need to know on one chart. You go to one place and one place only. You don't have to, that's what we say, we solve the information overload problem. You don't have to go to multiple sources and depend on multiple opinions. Remember, those are opinions as well. You don't have to depend on the news. You know, you can do the research yourself very easily and identify what's likely to outperform, which we call a classic bull. So a classic bull has these basic components. Obviously, you want a strong power gauge rating. You want that to be bullish. That's the ribbon here on the bottom. You want the price to be trending up, right? If a price is going sideways or down, that may not be the best, you know, that's not the best trend, right? You want it to go up. You want money flow to be strong. You know, that's the green here, the institutional money coming into the stock, and relative performance strong. And that's this second ribbon here above the power gauge rating. That's again in a heat map. Green means that the stock is outperforming the S&P 500. Red means it's underperforming the S&P 500. And I always say, if you're going to invest in individual stocks, go with ones that are going to outperform. You know, otherwise, just go with a S&P 500 account. I mean, on average, over the last 20, 30, and 50 years, each study that's done shows that the average return is 10% a year. That's not bad. It's better if you can go into individual stocks, and those stocks need to look like this. They need to be green, green, and green, and trending up. All right, so let's look at a couple of these. And these are great stock ideas for you. I mean, is this trending up, right? Yeah, big time. Crocs. These are the shoes. Look at that power gauge on the bottom. Really solid green with a few little ticks to neutral. Really strong relative performance relative to the SPY. And money. Not huge like it was back here, but it's consistently good money coming into this stock. It's perfectly normal to have little periods like this of money coming out. So really this does fit the overall bullish pattern. And this has a very bullish rating, which you can see up here in the top left corner. Price is trending up. These green triangles are buy signals. I'm going to be pointing them out along the way. We have 6 pairs of buy-sell signals. These are incredibly helpful to help you with timing. If your biggest challenge is timing, like 70% of our audience typically tells me, then pay attention to these green triangles. They can help you get in and out at the right time. So this is a stock that's been on my watch list. The green triangle here says there was an oversold buy for this. It was a couple of weeks ago, 413. No, it was just last week. Yeah, April 13th was just last week. Oversold buy. Let me point out this indicator here, overbought, oversold. You can see that it's dipping down. This is when you want to buy a stock. You want to sell it when it's going up. A stock does not go straight up. This is the average, this orange line here. This is a 200-day moving average. But the stock zigzags. I mean, that's a typical pattern. It zigzags. It's not going to always go up and always go down. This helps you measure when it's up and when it's down. And when it's down, that's a pullback, which you can see right here. It came off of its high up here and pulled back. This is a great time to buy this stock. And it was down, this is a chart from yesterday, 2%. And I think it was pretty even today. Now, they're reporting May 9th. What do you think about this coming up on earnings? Is this a likely candidate for you to put on your watch list and watch before May 9th? Just if you again can go back to that Q&A window and just put watch or skip. If you don't think it's going to be a good stock candidate for you to track, just say skip. If you think it's something to put on your list, just say watch. Oh, we're getting a mixed bag here. Some say watch. Raj says skip. Michael says skip. Steve says need more, back off. Boris says, do you support holding stock over earnings? It all depends on the setup. It all depends on what I'm looking at. If I'm looking at a sea of green like I'm looking at here, I would say, yeah, this is a good, that's strong. If that earnings component, when I drop down the power gauge rating is strong, I'd say, yeah, it's a good chance it's going to outperform or beat the analysts. And also you can see here, now they have beat 2 out of the last 3. But even when they disappointed, it pretty quickly got back up on track and kept charging ahead. So I have pretty much confidence in this stock that it's gonna beat. Let's look at Magellan. This is obviously in the medical care, another classic bull. I mean, do you see why? You see all the green here and the rising trend line. Now this stock reports Thursday, a week from today. So would you buy this now? Well, I would say no, because you can see here on the overbought, oversold, it's zigzagging up. So it's in one of its higher trends. You want to wait for it to pull back a little bit, which it will inevitably do, and buy it on one of these dips down. And you can see how this dip, for instance, corresponds to this dip right before the last earnings report. And that's great. If you had bought this down here and sold it up here after it spiked up about 6% on earnings, that would have been a really nice profit. I mean, those are the type of profits you can make during earnings season. And actually, it's probably more. Looks like it was at 95 and it went up to 105. So that was really a 10% spike. I mean, if I had bought this stock down here, I would have sold it up here at this upper volatility band when it spiked up 10% after they reported and said, thanks very much. Might do the same thing before April 26th next week. So this is on my watch list. I'm watching this and I'm going to wait for that pullback, and I will probably buy this before they report. Okay, one more classic bull. By now, I hope your eyes are starting to get used to looking at these charts, and you can identify as quickly as I can, really in a matter of seconds, whether this is a stock you want to know more about or whether you want to skip. I mean, again, this is a classic bull. It's all green. Everything's looking great. And look at the huge amount of money going in. And this is the interesting thing about money flow, and this is why I love money flow so much. When you see everything else being equal, right? I mean, since November, strong power gauge, strong relative strength, and decent money flow. But when you see money flow really kick into gear in March, same strong relative strength, same strong power gauge. The only variable that's changed is money flow. Look at what happens in the price. It's so predictable. I mean, that's the setup that you want to look for. And that's when you can really take advantage of some outsized profits. Now, this stock is reporting Monday. You see up here from our earnings calendar up here that's on every stock chart when it's reporting. You can see the last one. It disappointed. Look, it really pulled back big time after they reported, but immediately turned around and went up again. Interesting. Who knows? But look at the patterns. This is what I do when I'm looking at a stock chart. Look at the patterns. You know, the last two have spiked up pretty substantially and kept moving. So I would look at the earnings component on this stock. This is they're in the search business. They're in the executive search business. This was on my watch list. I did get this buy signal back on April 2nd, which is right here, this triangle, telling me this stock is oversold, meaning it's dipping down. If you want to buy this stock, now is a good time. And I didn't buy it back then, but you can see that would have been a good move. It was right around 30. It's now about 32. So how do I find these stocks? Well, I've been referring a lot to a screener. The screener is just that. It screens for stocks that fit your criteria. You can put in a myriad of any number of factors into it. Stock universe, power gauge rating, individual factors within the power gauge rating, performance technicals, etc. I've come up with a stock screener that I have depended on, which is the one that gave me the idea of Heidrick and Struggles just a couple of weeks ago. Putting in the stock universe of the strongest industries, because I only want to invest in stocks that are in the strongest industry groups, because the research has shown that those are the strongest candidates to outperform. So I want to go with everything loaded up as best I can in my favor, excuse me. So strongest industry groups, I want the power gauge rating to be bullish. And then these are the three factors. When I'm not in earnings season, this is what I plug in. I want the price to sales, short interest, and insider activity to be strong. I want insiders to be buying it because they know more about their company than I do. And I want the short sellers not to be shorting it. So that means it's bullish or strong. And price to sales, I want them to have some cash, this or free cash flow, and not be overvalued. Now, I was looking, I put in under price level oversold when I did this 2 weeks ago, because I wanted to look at what kind of candidates the audience could buy now. And this was for a webinar I was giving the next day. So I put in the oversold, meaning it would be dipping down in price. And I wanted that classic bull pattern, which includes money flow and relative strength strong. So I started out with a universe of 5,000 stocks. Literally in seconds, I got to 4 candidates. I mean, this is why I say you don't have to do the research. We do the research for you. And then you basically have to make the decision to buy now, buy later, or skip altogether. If you want to buy it now, I buy it. If I'm not sure I want to buy it right now, like Heidrick and Struggles was a couple of weeks ago, I put it on my watch list. And then I flip through the stocks that are bullish or very bullish on that watch list every morning and every afternoon after the close to see what's changed. And that's when I'm alerted to buy signals or estimate revision changes that can affect the price. So Mark includes an earnings, a screener, pretty much every week when he writes his Sunday market commentary for our members. And this Sunday, he focused in on earnings. So he put in a universe of the Russell 3000. He wants a power gauge of bullish, of course. And then he put in earnings growth and earnings surprise. He wanted those two factors to be strong. And then price level, he wanted it above a rising long-term trend. So he wanted it to be trending up. And again, to fit that criteria for a classic bull, he wanted money flow and relative strength to be strong. And then since small and mid-cap stocks have been outperforming the larger caps because they haven't had that exposure to the international markets and the possible tariff wars that everyone's afraid of, he put in a small and mid-cap universe. So he went from a universe of 5,000 stocks down to 14. And as you can see here, I've highlighted Walker Dunlop, which we'll drill down on. But this is where you can also get stock ideas. So you can do your own screener when you become a member, or you can rely on a stock market legend, Mark, to do his screener and then borrow from his screener. And that's perfectly okay, because you'll know they've been vetted. And then what he does is he drills down on one stock each week. This past week it was Walker Dunlop, which is right here. So we looked at that earlier. I drilled down on the earnings component here, which you can see here is very bullish. But you can see pretty much all of the components are very bullish, which obviously leads to a very bullish power gauge rating. So this one's going into earnings. It reports May 2nd. Let's look at the history. Green, green, green. It's outperformed, or it's beat analyst estimates each time. Interestingly enough, and this does happen 2 times ago, they beat. Look, it spiked up very quickly, but then it dropped down again, but then it has kind of worked its way back up again. So, I mean, there's no guarantees, but you put the odds in your favor by looking at the past performance and how the price has reacted. And of course, at the indicators down here, power gauge, relative strength, and money flow, these are all strong. And it just triggered a money flow buy signal. So that doesn't mean it's the right time to buy it, because it doesn't know if it's oversold or not, but it's saying, look, there's a lot of money coming into this stock. So if you're thinking about buying it, that's on your side. That's basically what it says. So this stock had also been on my watch list, but as I said, it was in Mark's screener. It came up in Mark's screener on Sunday, and he featured it as his stock of the week, and it reports May 2nd. So this is now oversold. It wasn't on the 15th. It is now. You can see it's dipping down. In my opinion, this would be a good stock that I will probably buy. I'm going to look at it tomorrow because I expect it to be down a little bit more. And I will probably buy this stock tomorrow before they report earnings on May 2nd. So in addition to the screener that Mark includes each week with his market commentary that goes to our members, he, as I said, he drills down on one stock. He calls it his stock of the week. And this week it was Walker Dunlop as well. So, you know, again, he did the deep dive on it and recommended buying this on a pullback. So we're all time starved, right? I say the new economy today is time. I'm not sure if I know of anyone who says, oh, I've got time on my hands, I don't know what to do. If that's you, good for you. But I suspect 95% of you, if not 99% of you, say, I don't have enough time to do what I want to do. So that's why it's so important to be efficient. And that's why we've made the work platform efficient, so that we do the work for you and save you an enormous amount of time. All right, so let's look at a classic bear. These are the stocks that you want to avoid. And it is just as important to avoid these stocks as it is to find the winners. I think it's a lot more fun. It's a lot sexier to talk about the winners. I mean, when you go to a party, you don't want to talk about the loser stocks, right? I mean, people say, hey, you know, what are some good stock picks, you know? It's just kind of the way our minds work. But it's just as important to know how to identify these classic bears and avoid them like the plague, or trade options and make money on the downside because you anticipate them going down further. But they basically have the flip side of a classic bull. And let's go along with one of the successful investors of all time, Warren Buffett, who says very simply, avoid risk whenever you can. That makes sense, right? It's pretty simple. We can help you avoid risk. Tesla is in the news all the time, and Mark has been talking about it for, gosh, well over a year. He calls Elon, what is his name? Elon Musk, the CEO. He says he's the P.T. Barnum of cars. For those of you who are too young to know, P.T. Barnum is a circus that is no longer around, but that's what he thinks. That's what Mark thinks of Elon Musk. And you can see the stock is not doing well. It's what we call a classic bear. Power gauge rating is red, underperforming the market in terms of relative strength. And the money's kind of in and out. But look at these sell signals. These are these red triangles. This is the overbought, oversold sell signal. So in this case, they're telling you to sell on the peak because it corresponds with the peak up here. Remember, I was saying you want to buy it when it's dipping down here. You want to buy it. If you're going to buy this stock down here, you want to sell it up here. Well, the same thing is true on the sell side. And these are great signals to use for trading options because it's telling you the stock is likely to go down, and that's what you're betting on if you're trading options or selling something stock short. So I know our members have been making a lot of money on this volatility by trading options, and we do have an options overlay. I'm not going to go into it today, but we do have seminars several times a week with our options expert, Josh Mindlin, who walks our members through how to use options play, which simplifies the decision-making process for you, and how to make successful options trades. So another bear, Kinder Morgan. Look at this, red, red, and red triangles. This stock reported yesterday, it beat. All right, so let me ask you this. This beat, is this a stock you think you would like to invest in? It's gone up a little bit from about, 12 or so to 16. They beat, however, there's a sell signal on it, an overbought sell signal saying it's spiking up. This is a good time. You can see that teeny weeny bit of money turning negative right here where my cursor is. It's just starting to go negative. So you tell me, is this a stock that you would buy now or skip? Just say skip or no or buy. Yeah, and I'm getting a lot of no's. Raj, T. Murphy, Mahesh, Judy, Jerry, Steve, Robert, Herman. Everyone says, Ed says short it. That's cool. Michael, I own it. I think it will consolidate since overbought, but 60% increase in earnings may spike interest. Well, now see what we would say, and everyone else is saying skip it or short it. Michael, what we would say in our methodology is you don't ever want to bottom fish. You don't want to buy these losers that have all this red. Yes, because they did better on their earnings than analysts expected, and the analysts probably had very low expectations. Boy, if I own this stock now, I would get out on that sell signal at 16, and be happy that it's not going down any further. But that's obviously your call. But that would just be what our methodology would indicate. Oh, Michael said, I'm sure you're right. I owned it before I joined Chaikin. See? Oh, okay, Michael. Okay, well now you're going to own Chaikin, and you're not going to get into this situation in the first place because you're going to know to avoid it, right? You would have never bought this stock, Michael. Tell me you would never have bought this stock looking at this chart, right? I'm putting you on the spot here, but if you can just tell me, looking at this chart, if that's, yeah, never. Okay, thank you. All right, there we go. Testimonial, real time. Awesome, Michael. We can help you out here. Okay, here's another classic bear going into today's earnings report. Philip Morris, it's been all over the news because it was down 15% today, reported today. Looks like they beat. But the stock went down 15%, so probably guidance was really poor. And you also had a sell signal on this. So this would have been a great opportunity for a put option or selling short. How would you have liked to have been in that and had a 15% drop going your way? But I mean, look at this. It's all red, right? And you've got this relative strength breakdown cell saying this stock is breaking down even more than it has been on a relative to the SPY basis. Look at the money flow coming out of there, and it is oversold. So you could also have oversold buy signal. I can only overlay one pattern on it at once, but it very well could have an oversold buy triggering here because it's now peaking up there. So again, this is what Chaikin can help you avoid. You would not be in this stock. Michael, you can answer this too. Michael, you would not have bought this stock either, would you have, looking at this chart from what, August on, when it really started turning red. I'm really putting you on the spot here, but it's just important to look at this, at these patterns and be able to understand them and see them so quickly. So Michael says, never again. Thank you. You're awesome. Thanks for being such a good sport. Okay, Tom Gentile. I know we have a lot of attendees on today who are friends of Tom Gentile and follow Tom, and we work with him presenting to his audience, and he presents to ours. But he says this gives you the edge needed for trading success. Rules-based trader, rules-based instead of emotional trader. That's what I'm trying to drill into you. You've got to have rules. In both stocks and options, I rely on quantitative analysis to give me the edge needed in trading. Chaikin delivers something that very few software tools do, the ability to have superb charting capabilities, but also MARC'S proprietary algorithms, not found in standard charting software. I highly recommend Chaikin to anyone looking to gain the edge needed for trading success. And we all need an edge, right? So let's move quickly on to timing. I see it's got about 7 or 8 minutes left. So timing. Okay, I've been pointing out the buy sell signals all along. I've been pointing out the overbought, oversold indicator and how that's important to help you with timing. This is a chart created by Dr. Wyckoff some 95 years ago when he was teaching how to invest in the stock market. And he charted the way a price actually moves. And this is, this is the zigzag pattern I referred to. It goes sideways, it goes up, it pulls back, up again, sideways, up again. If you understand that this is how a stock price moves, it can really help you identify timing. But that overbought, oversold indicator does it for you. It smooths this out on that curve. So how do you know when things like this happen? How do you know when, say, an overbought sell signal has triggered? Or any of the other signals have triggered, or a power gauge rating has turned, or an estimate revision by an analyst has changed up or down. These are all things that can really affect the price. It's like, I call it like the executive summary. So what we've done is we've added what we call this alerts view. which is what you're looking at here, where you can overlay this on any list. Now, I have what you see here as my watch list. These are stocks that I'm watching, and I have a My Stocks list. I overlay this alerts view on each of those lists every morning and every night. And that's my 15-minute routine, because I can immediately see what's critical, what could affect the price. Micron, MU, that's been in the news a lot, and a lot of our members have been talking to our customer success team about Micron. It triggered a reversal buy today. Well, gee, that's nice to know. I'm watching Micron. Check it out. Walker Dunlop, that also was on my watch list. And as we've already discussed, it triggered a money flow buy today. So this is your executive summary. This is where you can get, the overview, exactly what's happening, what changes have happened since yesterday to stocks you're watching or stocks you own. So, real quickly, just to tie in that buy signal, here's the money flow buy, this green triangle here. And it's also in an oversold condition, which is great, because just because money flow triggers doesn't mean it's the right time on the overbought, oversold indicator, but it is, and everything else is green. So as I said, this is a stock I'm likely to buy before they report on Wednesday the 2nd, and I'll look at it tomorrow and Monday. They'll probably tick down a little bit further. But that's the way I evaluate stocks. And timing. How do you know if a stock's going to beat or miss earnings? Well, I have been pointing out the earnings overlay, which I kind of exaggerated here, which is on every stock chart up at the top there. If you drop down on this little EPS thing, then you get a little more detail about what the factors are and where this is headed, when they reported, when they're going to report. And that just gives you a little more detail on a stock. So let's quickly look at 3 stocks where I sold on an earnings profit. And this really ties into when to sell. I have rules. The rules are when I sell either I sell to take a profit, or I sell because I sense the stock is breaking down. And when I take a profit, it's one of 3 reasons that got me there. It hit that upper volatility band, kind of went outside the channel, so it's it's a good opportunity to take your profit and be happy. It's overbought. That's that dipping, peaking up as opposed to dipping down, or it spikes up after a strong earnings report. And I'm going to show you 3 examples of where I actually did take the profit on a strong earnings spike. This stock I've been out of 3 or 4 different times, always taking profits. Last time I was in this stock was in September. I bought it here with this relative strength breakout signal when I got the alert from my watch list. Everything else lined up. You can see it was oversold, green, green, green. And you can see it, hit this breakout pattern, pulled back a little bit, but stayed pretty green. When going into earnings, I was pretty confident with that big money coming in, relative strength, and it was just ticking over to positive on the power gauge rating. So I was confident, and also looking at the past. Look at the past EPS. If it's shaded like that, it's neutral, so it met analyst estimates. Didn't exceed, it met. But look what happens. It drops way down, and then the next day it spikes up again. It drops way down, spikes up again the next day. So going into this, when it dropped down, it dropped down like 8% when it reported better than expected earnings. I didn't panic because everything's green. Everything's green, power gauge, relative strength, money flow. And I knew looking at these past patterns that it was most likely going to spike up again. And that's exactly what happened. So you just wait for it. And, 3 or 4 days later, I got what I was waiting for. I bought the stock at 35 and I sold it, on this spike at 41. that's how you can use volatility to your advantage. And look at what happened this last earnings season. Exact same thing, right? I considered buying this, but I didn't like the fact that money flow was negative and relative strength was, I thought, I'm going to pass on this one. But it did the same thing. It dropped down and then it spiked way up again. I mean, it's crazy. So they're doing this May 2nd. So, that might be a stock. Put on your watch list. Look at the pattern. And, watch it before May 2nd. You might want to take a shot at it. Power gauge has just turned. Relative strength is positive and money flow is positive, and it's oversold. So it's in a good position. LPL Financial, this is another stock that I took a profit on earnings. I bought it down here. It had like a 6% or so pullback down here. I bought it at 58. They reported it spiked up, and I sold it like 10 days later. So this was a really, quick profit of 9% in like 10 days. Columbia Sports, this is a more recent stock, but again, had been on my watch list. I bought it with this buy signal. Momentum breakout. I love those signals because look at the momentum that stock had. Still does. Strong money, relative strength had just turned, strong power gauge rating, all looked good. So I bought it down here on this buy signal at 61. It was also oversold, dipping down, which is great. And then I sold it here after the earnings. It spiked up about, I think that was about 7%. And I sold it up here at 77. Also, when it hits this upper volatility band, that's usually saying, this is as high as the stock's going to go. Take your profit and be happy. So on this one, I made a 25% profit. I mean, it's something I could have bought back. Back down here, you can see it pulled back to like, what's that, about 68 or so recently, and now has gone back up again. But, the money, the profit was made, money's put into another stock. So, all is good. So I've been pointing out some of the testimonials we get along the way, and we get a lot of them from our members like Norm, who says, through following your excellent system, and let's underline system, because you do need a system. My portfolio now stands in excess of $1 million. Before Chaikin Analytics, I would make money and then lose it. Consistent earnings were just not a reality for me. I mean, can anyone relate to that? Chaikin Analytics has changed all that. I can't thank you enough for your tremendous service and excellent methodologies. And I do stress the service part, because Joe and his colleagues on the customer success team are devoted to your success. That is their job, to make sure you are successful. And that's really all of our jobs here at Chaikin Analytics, to make you successful investors. So let's recap the 4 steps. You've got to know a stock's direction. That's by following the Chaikin power gauge rating. You need to know whether, how to identify that classic pattern of a bull or a bear. Timing, critical. Know when to time, when to get in, when to get out. And anticipate whether a stock is likely to beat or miss earnings, so you can take advantage of that volatility either on the upside or the downside. So the promise I made to you earlier on was that you would discover how to take advantage of volatility and make more money in the stock market, so you too can take some pretty cool vacations or down payment on a house or a car or whatever it is that you have in mind. But put something in your mind, because it really makes it a lot more fun and engaging to have a goal in mind. I'm going to make X amount of money so I can go to, in our case, we love Italy, so we're going to Italy. I'm going for 3 weeks. Mark's coming for 1 week. But, having that goal and something to work towards, it's kind of fun. Another one of our members was up 47% last year. The S&P was up 20%. She more than doubled the S&P. She couldn't have accomplished that without the help of the entire Chaikin team. Sandy's encouraging words, "You can do this, and here is how," was so empowering. My husband has confidence in my judgment. Thank you, Chaikin Analytics, and I feel empowered. Life is good. So it's a great feeling knowing that you can do this. And I speak from experience because I was the shy violet that said, oh, I can't do this. This is too complicated for me. I can never learn this. Somebody else has to do it for me. But knowing how to do it yourself and manage your own money and make your own decisions. And I promise you, a chum chum honor, as my college friend used to say, this is true. Mark does not tell me when to buy and sell or what to buy and sell. My account is totally separate from his, and we really don't compare. But we want you to be our next success story. And this is all possible on the Chaikin Analytics platform. We did win a very significant award this past spring with Benziga for the best stock ideas platform. And that's for the screener and also for a stock discovery engine, which we haven't even had time to explain, but it's like a Pandora for stocks. You seed it with the stock idea. I could have seeded it with Walker Dunlop, for instance, and it would show me other stocks that are similar to Walker Dunlop. So it's a really great and profitable way to find ideas. Another subscriber has gone from a count with 235,000 to 1.2 million in 7 months. He's been trading options. And he said he's been trading options for many years with not much success. On January 2017, I found your system. I started the year with 235,000. And as of today, which was July 30th, he was at 1.2 million. I would not have been able to achieve this without your system. So again, we do have this options overlay and options classes. So what does all this take to get involved? Become a member of Chaikin Analytics. We normally sell a year's subscription for $2,195. We're taking $300 off when you subscribe by Sunday night, midnight. But if you will stay with me, we're going to make that even more attractive. So what does that include? Well, the Power Gauge model, which we talked about, stock discovery engine, which I said we did not talk about. The screener, which we talked about. Here's the options overlay. It gives you the highest risk reward scenario. So it does the calculation and work for you. We have the intraday pricing, which is great, knowing timing when you're buying and selling a stock. It's real time information. I didn't show this to you. Earnings, we did discuss earnings. We did discuss the Market Insights, MARC'S weekly commentary, which is packed full of really, it's called insights because it's from Mark. It's his insights on the market, and he's the one with 40 some years experience on the market with specific stock ideas to help guide you. And this is something I always love to point out because I think this is so powerful. But as I said, our success depends on your success. So we want you to be armed with as much knowledge how to use the platform as possible. So when you subscribe, you will be in, when you subscribe today, you'll be into a small group tutorial tomorrow. You can get into a class tomorrow so you can get set up. They'll show you how to create your watch list, how to use those alerts so you know what's buy or sell signals have triggered, how you can drop down those buy sell signals so you can see when they are triggering. They'll show you exactly how to use the platform, and you can go to as many of these as you want. They're all part of your membership subscription. Unlimited coaching and support, including one-on-one. So if you're feeling, well, gee, the certain way that I trade is unique, I'm not sure how I would combine it with Chaikin, not a problem. You schedule a one-on-one, as many as you need, with one of our customer success team members, and they'll show you and walk you through how to use it to your advantage. So one last testimonial from recent one from just last month from Alex. I can't tell you how happy and grateful I am to have found Chaikin. I found you through Jim Cramer, and that is a day that changed my investment life. So we're big fans of Jim Cramer. We had dinner with him Sunday night at his restaurant in New York with he and his wife, Lisa, San Miguel, Bar San Miguel in Brooklyn. If any of you are up that way, it's great. And you might even run into Jim. But I know there's a lot of Jim Cramer fans on the webinar right now. So I said we'd make the deal a little bit sweeter. We're going to take an additional $100 off when you subscribe by midnight tonight. So I hope this has spurred your interest and gotten you excited about investing and taking advantage of volatility, and that instead of being fearful of volatility, you can embrace it and say, oh, this is great. Bring it on, because I know how to take advantage of volatility and make money with it. So thank you all for attending. Joe, I'm going to turn it back to you to close out the session.
All right, awesome. Thank you very much, Sandy. And again, the offer from Sandy for a full year's worth of access, $17.95. That is full 12 months worth of access, including all of our support webinars, including a session that we're holding tomorrow. That is our onboard session. It is the perfect way to get up and running with the Chaikin Analytics platform. We're going to show you all the different ins and outs. Sandy asked a number of questions throughout the session involving how to assess a given situation. We're going to put you in a position where you can very quickly and easily have an impact with that. But first things first, obviously, once you take advantage of Sandy's offer, get you right in the door. We'll have you access to the program within just a few minutes after subscribing. I chatted a link to that page right within the chat box. You'll find that. Just go right to chaikinanalytics.com/checklist. Checkout page will look just like this. But again, once the payment goes through, you'll be able to access everything. You can upload your portfolio literally tonight in preparation for the market to open up tomorrow morning. And of course, we'll have you set up and ready to go for that onboard session. So in the meantime, I want to thank you all for joining us. Keep an eye out for the recording tomorrow. But again, in the meantime, $17.95 for a full year to Chaikin Analytics. Give us a call at 877-978-6257. Till then, have a wonderful evening, and we will see you on tomorrow's onboard session.